So it's a single LP into the AAA CLO fund from Janus Henderson through Centrifuge, and now they've got $500 million sitting in there, immediately skyrocketing to the #1 asset, right? When it comes to this thing.
My honest opinion is a lot of these general L1s, L2s, they basically saw something hot and shiny within RWA, so they kind of pivoted towards RWAs.
You guys had the most active addresses, so I'm curious, who are the Plume users? Why are they the most active?
Private credit market is not as squeezed and there's not as many cracks as people may think. It's actually quite sturdy and strong. He does not expect any cracks first half of 2026 or even in 2026 in general. Welcome back to another episode of Money Moves Fast, our premier weekly show covering all things tokenization, RWAs, and payments.
This show is made possible by Polygon, the leading blockchain for payments and RWAs. Money Moves Fast is the convergence of Wall Street and digital assets. Now sit back, relax, and enjoy the show.
2025 year in review, tokenization, live on Roll Up TV. Chris Yin, Teddy Pornprinya. Guys, GM, welcome.
G Plume, bro. Thanks for
having us. Good to see you guys. Thanks for coming.
Today's show is powered by RWA XYZ, apparently. So shout out to those guys. They're absolutely crushing. Great tool. And guys, it's Money Moves Fast, episode 14, powered by Polygon. An amazing payments chain, fast, cheap, great payments, stablecoin transfers. I'm sure we'll see some of that on today's show. It's the last one of the year. It might not be the last one of the year, but it's definitely the 2025 tokenization year in review. Chris, Teddy, it's not your first time on the show. Great to have you back. Friends of the show. What do you say we dive in?
Yeah.
Love it. Let's get it. Thanks for having us.
Well, I'll kind of tell you what we're looking at here on the screen. You'll see the first chart here. What I think is most relevant about this one is this Janus Henderson AAA CLO. Pretty much said, we're going to go live, and oh yeah, we're going to take the #1 spot shortly thereafter. And kind of tested things out with like 50 million, and then quickly 10x that to like 500 million and beyond. I would just love some insights from you guys as to the types of RWAs you're seeing get the most traction. I hear CLO get thrown around a lot. Maybe you could just like unpack some of these terms. When people say AAA, what does AAA mean? CLO, what does CLO mean? Give us kind of like the basics. People have been hearing about tokenization all of 2025. They want to know and get acquainted with it, because this is a trend that we believe is going to stick around in 26 and beyond.
100%. Look, it's a good question, a good point, because RWAs are newer in theory, right, to crypto, but people don't really understand what these things are. I mean, look, even me and Tay didn't understand what these things are for a while, right? We had to learn and figure out real time as things are going, like what these things mean, how to think about ratings, how to think about asset classes. Big picture, though, it comes down to two things, right? Risk and yield, right? And those are the two dimensions that kind of come back and forth. You have some sub things like duration and all that, but big picture, you're looking at risk and yield. And the starting point for everything was T-bills, right? Because T-bills, were the sort of dominant asset that RWAs were kind of, positioned against for the last, 2-3 years, because the rate was high. So the risk-free rate from the Fed was, 5-ish%, give or take. And so that means you could put basically any amount of money into T-bills and you could get a 5% return. Right, very, very stable, very safe. It's completely liquid, right? It's usually these things are T+1, T+2, which means you can withdraw, and within a day or two you get your money back, and the risk is basically zero, right? It's basically is the U.S. government going to default, right? And so very, very straightforward, clean, and easy asset. But as with everything in life, right, you taste a little bit and you want more, right? And that's kind of where things are going, right? So you start with that, and people are beginning to sort of want to ramp up on the APY and the yield, and now we're getting into more esoteric stuff. And we're seeing a bit of a spread. You have two dimensions. You have kind of moving up the ladder slowly from T-bills to things like CLOs. We could talk about that in a second. And then you have other ones that are going straight to the top and now coming down. And we're kind of meeting in the middle. We'll find out where people coalesce around and what ends up being like the dominant story. But there are, two sides of the pole right now, right? It's always like a bit of a barbell, right? And so you have T-bills and people are moving up a little bit because the T-bill rate's also coming down, right? We've been waiting for the whole year for Jerome to get up there and say rate cuts.
Bye, Jerome.
Right?
May 2026.
Exactly.
See you later, buddy. Trump's in office now, basically.
Hell yeah, the golden bull run can finally start, right? So that's what's happening next. So as these rate cuts are coming down, T-bills are going down, right? The rate. So this 5% is down to 4, now to 3.5-ish, right? And so that's going down. So people are now searching for new yield, new places. And obviously you have to dial up the risk and dial up the duration in some cases. So CLOs are the next best thing after the T-bill, right? So you're not getting a tremendously higher difference in the yield, but you're going from maybe 5, depending on the type of CLO, to a 6 or a 7, right? CLO stands for collateralized loan obligation, right? So these are like fully secured assets. You're borrowing against something very safe and straightforward, very deep liquidity against them. So you can still withdraw a lot and put in a lot of money without affecting anything. And you can still withdraw in basically 1 or 2 days for most of these assets. And that's what this Janus Henderson fund is. It's a AAA CLO fund, right? So what you can do now is put any amount of money. We see with Grove here, put $500 million in. Right, so it's a single LP into the AAA CLO fund from Janus Henderson through Centrifuge, and now they've got $500 million sitting in there, immediately skyrocketing to the #1 asset, right? Wow. When it comes to this thing, right? So it's been a big move because now you're getting real 6-7%, right, on a $500 million asset, right? That's just not a thing you see elsewhere,
and
right? And so that's been a huge
risk
move
too, right, Chris? Like not T-bill level or money market level low, but like relatively low. And so we had the Stable Watch guys on yesterday doing a stable coin kind of yield coin year in review, if you will.
Yep.
And we talked about how Sky has done an incredible job of diversifying their yield sources.
For sure.
And how that is going to lead to their success over something like an Athena, which just solely is reliant on the basis trade currently.
Yep.
And I think what you're presenting to us is exactly what somebody like Sky is thinking effectively, and other RWA providers, and then obviously like these funds. So just to be a bit more clear here, and then Teddy, I'd like to get your perspective here on the institutional fund metric side. So, if you look to the left of the chart, January 1st, end of it is obviously kind of where we're at now. We saw effectively a rise from, you could call that, I would say $100 million or so in the beginning of Jan. And then that thing quickly rose to $1 billion come August. So we 10x'd or so from January to August, 10x'd. Then we did another 3x nearly from August to November, basically until middle of November. And now it looks like we're about to go higher. So if my math's not mistaken, that's a 30x. With that being said, Teddy, where does this go 2026? And what do you want to add to Chris's point, just generally on the risk adjusted yield kind of dynamic happening today?
Yeah, 100%. I think Chris basically hit the nail on the head. But to be honest, what Chris said wasn't super obvious to folks when we started building out Plume. The fact that you could literally deploy in size into these more liquid, assets that are actually generating real yield back to users wasn't really a thing until Plume came around, right? I think people were just, yield farming, going between different chains, deploying into different DeFi protocols. But as we've seen in the past few months, DeFi isn't as safe as RWAs. It's crazy to believe because, when we first started Plume, people were like, oh shit, like RWAs, like, well, what's actually happening to my money here? So what we're seeing right now, and like you just described, like this exponential growth in RWAs is basically, a huge information gap being filled in between, right? Like a lot of folks are finally understanding the assets that we're bringing on, whether it's like private credit, treasuries, all these different alternatives on Plume. But the biggest thing that, we're doing differently is actually allowing permissionless access to these different assets. And, in 2026, what Chris and I are starting to see is a lot of folks that have been very traditional players in the space, like the securitizers, all these big players in the RWA space that we're close friends with and that we're partnering with, they're actually asking for help from us to really deploy these assets permissionlessly into these different distribution channels to really gain, real users and activity and utility on their assets. So I think, this year was a pretty good start for RWAs. I think it's still pretty early on, if you ask us.
Yeah.
But all of the places, all the pieces of the puzzle are being put in place where the regulatory regime is, opening up a bit. A lot of institutions are coming in this space. JP Morgan, dude, they've been researching Ethereum for years, and they're finally deploying some funds on. So a lot of stuff is happening, not only in the US and actually a lot globally. So in Asia and the UAE, Chris and I, we just came back from a long trip out in the Middle East and in Asia. And I think what a lot of folks don't realize is the RWA opportunity isn't just stuck in the US, right? There's a lot of velocity in Asia, a lot of velocity in the Middle East, a lot of velocity, honestly, anywhere outside of the US.
A lot of capital too, you know what I mean? And they want to put it somewhere, they're it's like investment seeking capital from large entities. And Teddy, just to kind of, double down here, basically what we're saying is RWAs had their breakout year this year. Tokenization really had a breakout year. I think where you guys are looking to kind of take this industry to the next step, and generally where it's going to go, I believe, is just like, you know, as you guys say, RWA Fi. We're just generally actually taking these assets, bringing them into on-chain ecosystems, and then creating on-chain economies with them. And so, guys, I'm going to just put you both on the spot, and then we'll move on from this fun question. Is Janus Henderson going to dominate 2026? Will we see them at the top of the board on December 31st, January 2026? Will it be Superstate? Will it be somebody else? What is your predictions, guys?
Yeah, that's a good question.
And if there's no answer, no comment, we can move on. But come on.
Look, I think
Give me a
look,
thesis,
it's hard to look at anything in the future with any certainty. Look, I don't even know what I'm doing tomorrow, right? So that's probably the starting point. But you know, I do love to predict. I do love to throw shit around no matter what. So I would say this. Look, I think the answer is no. Right? I'm a big fan of Janus Henderson. We work with them all the time. We have a bunch of stuff there. So I think they're high quality products, great people, and great services. But I think people are going to want to diversify, right? If you look today, if you're on the RWA XYZ page right now, if you scroll down a little bit, right, into the table below that gives you the stats on each of these things, right? If you look here, I think the number one distinction here is if you look at there's a column for holder count, right, across these things, and I always think that's what matters more. Right. And if you look at the holder count for these assets, you know, unfortunately, you look number one, 10 holders, number two, 45 holders. Number one is one holder, then 8 holders,
looks
right?
So sketchy, man. You're like, who's actually using this stuff?
Correct, exactly. And it's not to say it's a bad thing. You have to start somewhere. So I'm very positive. I think it's actually incredibly bullish and good that this is happening. But we need to go to the next phase of people actually using this. And I think as that comes into play, we've seen with things like Athena as an example, right? USDE, great product and a great team. Obviously, shout out to Athena. I think they've done incredibly well for themselves. You look at things like Maple, you look at USDS, right? You look at the holder counts for those and the TVL that goes for those as well. We're not talking 1 billion, right? Athena got to what, 12, 13, 14 billion. Maple's up to 5, 6, you know, USDS has always been kind of 5, 6, 7, right? So these products are retail money, right? Being able to get to 5, 6, 7, $10 billion in TVL overnight as well, right? In the course of a year. And that's a much more diversified set of users. And so just say, when you tap into that user base and actually have real users against this thing, the TVL skyrockets in new ways. So just to say, just provably, if you look at USDE as an example, they have, you know, hundreds of thousands of users, right? And up to 10, 12 billion in TVL. So if you look at that alone, if you can get, you know, you have one user or two users getting $1 billion in TVL, right? When we see this begin to crack into the mainstream next year with crypto and billions of dollars flowing in and hundreds of thousands of users, there will just be more money coming in and there will be new winners to be crowned. So will it be Janus Henderson? Could be, you know, but could be a bunch of other things. And so I think there's a good chance it's something else.
It's hard to say who the winner will be next quarter. You know what I mean? So exactly. It's like, all right, guys, let's flip to the next sheet here and data point. I think it's going to be something around just generally who's kind of dominating on the network side. You know, I think that a lot of people think about tokenization from the fintech perspective, but it's also obviously the yin yang here is the off chain and the on chain, right? And so we got to talk about the on chain. Ethereum, number one, dominating by a country mile. We were told back in the day, 2020, 2021, 2022, institutions are really coming this time. Ethereum's credible neutrality was going to matter. It was going to be important to have this credibly neutral, decentralized, censorship-resistant base layer. What happened was Securitize went multi-chain. Everybody went multi-chain. Nobody cared about Ethereum. Ethereum was left in the dust. You know, theoretically, mind share and kind of some believers were kind of like, guys, I thought institutions were going to come to Ethereum only. Well, we got L2s, we got all this other stuff, all L1s, et cetera. But by the numbers, it's quite clear that Ethereum's dominating and will continue to dominate, I believe, in this RWA category. How do you guys think about the chains? Plume's in there. Red, I see red. It's still day one, boys. Yeah. It's still day one. Okay.
That's right.
Exactly.
But how do you look at this list from a competitive standpoint? From a non-biased standpoint, even, how do you look at this list as a founder? And I know you guys both want to dominate here. Where do you see this going?
Yeah, Teddy, please go for it.
Yeah. I mean, I think, look, you know, Ethereum, obviously they're taking a big part of the chart because they've just been around forever, right? You know, when a lot of the folks Chris and I spoke with in the beginning days, they're all starting on Ethereum because that's what they're used to. You know, it's basically the chain of choice for a lot of institutions and a lot of these folks coming in. And then you're right, like over time, a lot of these players started coming in. My honest opinion is a lot of these general L1s, L2s, they basically saw something hot and shiny within RWAs, so they kind of pivoted towards RWAs, and they were trying to do anything to be relevant in, on crypto Twitter amongst everyone globally talking about crypto in general. And then there's like a whole subset of, more focused chains like Plume that started popping up. And so you can see here, like that's on the chart, I think Ethereum still holds a big part of this chart because they've just been around forever. They've been battle tested. A lot of folks are very used to deploying their assets and funds there first before going multi-chain. But as you can see, there's a lot of other players that, to be frank, I don't even know what they're doing in RWAs. I don't know why they're here, but
there's the competitor in them.
Yeah.
So I mean,
but
look, Teddy,
I think.
Yeah, please.
Oh yeah, go ahead. No, go ahead.
I was gonna say, so this thing started at $5 billion or so, just over $5 billion, right, Rob? Around early Jan, and then this thing ran to almost 20 billion, so a good 4x this year across the board. What do you guys think led to this drive? Is it just this tokenization kind of like mania, if you will, that's been going on? I mean, this thing is up a good 4 times. The stablecoin value, look, as you can see, we're about to cross 300 billion. Obviously, a lot of this was driven by stables. But this specifically is not including stablecoins. This chart does not include stables. What drove this trend, and what do you expect to be the main drivers for next year?
Totally. I mean, look, I think the short answer is when there's a chart and a goal, then people play into it, right? I think that's the real answer here. The RWA, this stuff is in no way uncorrelated to the rise of RWA XYZ. Again, shout out to Adam and Charlie, right? I think they built a great thing, and it's wonderful that like people can actually see this and begin to coalesce on what are the right ways to look at it, what are the right metrics, and they keep adapting, updating things at time as well, right? So if you look at this, it really comes down to that. People are still trying to figure out, right, what are the right ways to look at these? What are the right numbers? And so you look at a few of these graphs and people say, okay, how can we get up on here, right? It turns out they can see the winds turning, and they can see the tide and trying to get into the game here and create a story. It's no surprise also on this list is a couple chains that were kind of old and dated and just not really a thing anymore, right? And now they're kind of trying to reinvent themselves into this new thing. Of course, there's a bunch of very relevant good ones too, right? But it's a mix of a bunch of different chains, right? Because they realize that if there's a chart measuring stats, you can easily play into it, right? And so you look at a bunch of the deals here, and some things are going on. It's the same thing. You have a single user buying this and putting something that's already tokenized on chain, right? To then kind of have this thing and get your number up, right? And so that's what this list is today. Doesn't mean it's bad though, right? Again, everything's got to start somewhere, but that's what this is, right? Today, it's a lot of random stuff happening to try and sort of get a grip on what's really going on in RWAs and begin to feel our way around, right? It's like that. It's the story of the sort of like the blind guys and the elephants, right? It's a bunch of people like feeling around like, what is this thing? Is this real? How do we do this?
You know what I mean?
Yes.
Everyone's kind of taking their cracks at it. But
yes, exactly.
You mentioned holders. We got 578,191 RWA holders on chain. Like guys, like. Yep. Can we get a golf clap? Let's go. 600K on chain. Come on.
Exactly.
I mean, that's pretty damn good. I mean,
hell yeah, it's been great.
That number was probably really damn low end of last year, to be honest.
Yes. Yes, I think it was. Oh man, let's see.
It's like 200, I think, right, Chris?
It was even less. I think it started the year at 80,000. I think is my recollection. Yep, 85,000.
And this is the total RWA holders over all of these networks.
Yes, that's right.
When we look at a per network view, I think this chart is going to look very different because like Chris and Teddy are saying is that on the the largest capital base of these RWA products, it's normally one holder, 5 holders. Yep. So obviously holders are up, but different chains are taking different approaches when they're going to market with these products. Chris, there was one thing that you mentioned earlier that I would love to just kind of loop in because and give us a really well-rounded perspective of this market. You mentioned risk and you mentioned yield, and those are 2 of the primary dimensions. But you also mentioned duration. And I think this is something that is flying a little bit under the radar, but is going to become important. And maybe with duration, that's why Ethereum is leading in this credibly neutral, like secured against World War III. Like people are seeing 40, 50, 100 years into the future. Could you just describe what is duration as it relates to RWAs?
Totally. Duration is a very simple concept. All we're talking about duration is the idea that these assets do not come back in a short period of time. So you put your money in, and there's some period of time in which you have to wait until the money comes back. There's duration for 2 things, duration on principal and duration on yield. Right. And again, people don't really understand the distinction between these things. Right. But those are 2 things you have to think about here. Right. If you look at your average T-bill, right? The duration on that is what, that's why they say T plus 1, T plus 2, or T minus 2. It means you can get the money back in 1 or 2 days, right? But if you think about other RWAs typically are some sort of lending. That's what this is, right? You're lending to the US government, you're lending to, a Vietnamese coffee shop or some kind of, you're lending to whatever it might be, right? So depending on who you're lending to and how you lend to them, the duration is different, right? So take for example, the classic example from last cycle was our friends at Goldfinch, right? Where you were lending out to emerging markets, right? And you would be able to sort of, in one click of a button, spread money all over across the world, right?
They were emerging,
primarily to
right,
emerging
Chris.
markets.
They were very emerging. We call those ultra
Exactly.
emergent markets.
Yes, exactly. Exactly. And that comes to the risk as well with duration, right? Because, and how to think about secured versus unsecured, all these different dimensions. But the duration piece ends up being, if you lend your money to, let's just call it an auto shop in Malaysia or something, right? Like, who knows if that's good, if that's real, if that's bad, when's the money come back? They've got, like, if you lend money to an auto shop in Malaysia, they have to actually run the business, So the cycle on that money can be anywhere from, 1, 2, 3, 4, 5, 6, 12, 14, 24, 48 months. We've seen with things like real estate. We was on the phone with a real estate project yesterday, a very, very good one. But their duration, the shortest they can get down to is 15 months, which means you put your money in, you don't get it back for 15 months, right? And the thing that's a huge mismatch here is usually duration is correlated with yield, right? So the longer the duration, the higher the yield, right? Generally speaking, it's not completely true. We actually have a bunch of assets that have come out that are short duration with high yield. We get to that in a second, right? But big picture, right? That's the focus right now, is how do you get to high yield but short duration? Because look, crypto, right? In TradFi, people are used to longer duration. We have 401ks, we have these pension funds, we have big pools of capital that are permanent money.
I'm
right?
allergic to long duration in crypto. I'm absolutely so used to the liquidity being able, one click of a button 24/7. And that's this mismatch.
And that's the magic of crypto.
That's like this
That's the magic of it.
Yes, it is a magic. Yes.
That's what we want about this thing, right? But you're totally right. That's the mismatch today. People are used to be able to say, look, I'd rather have incredible risk, right? Who knows what this thing is built off of, but at least I can pull my money out anytime, right? Whereas you're really now reducing the risk by a huge amount, but you're going to have to wait 3 to 6 months sometimes. And people are very uncomfortable with that at this point, right? Like, look, DeFi has been around for 4 or 5 years max. So the idea of holding something there for 2 years is ridiculous, right? Yeah. So that's duration risk right now. And that's what this means. And that's a dimension we have to think about. And that's why people are bullish on Ethereum. And that's why things have been good, because people are thinking about, when you're thinking about a long duration asset, you do have to think about where it's going to live, and how you interact.
I want
with
that thing to live on the safest place. Rob, I hope that gives you enough meat to chew on, because on this
I think Wall Street is the audience and the market segment that is most concerned about duration, and that's why we're seeing these institutional products on Ethereum. But if you contrast that with the chart that's up now, you see, like, I want to ask Chris and Teddy what their audience segment is. Like, what is the topography? Like, what are the demographics of an asset, or excuse me, an user of Plume? Because Plume is the number 2, arguably. I don't know why they have Solana listed above you guys, because it seems like Plume.
Well, I think it's the most recent, basically.
Oh, okay, the most recent there. But for the majority,
if you do the aggregate, which is one tab over in asset holders, that's the one that'll show you the.
You guys are in your a bit of your first bear market here, lads. Strap in, don't worry. We got bear spray. I can bring you some bear spray. That thing's gonna go
over
back
the
up.
course
That was a test pump.
Over the course of
July was a test pump, boys.
Over the course of 2025, you guys had the most active addresses. So I'm curious, who are the Plume users? Why are they the most active?
For sure. Teddy, go ahead.
Yeah, I can start. I mean, if you look at the tab Chris was talking about, in aggregate, we're the largest chain by RWA wallet holders, larger than Ethereum, Solana, all these other chains, even combined. The reason why that is because we've actually structured a chain where we can make these products feel a little bit more like things that, on-chain users are used to. So, our assets feel a bit more permissionless, a little bit more liquid and composable through our Nest product. And so if you look on-chain at the stats, a lot of our users are within PUSD. They're within our Nest different Nest vaults. And what users are actually doing that they can't do in other chains is looping RWAs. So they can put money into an RWA asset on Nest, take that collateral token out, put it onto Morpho on Plume. And on Morpho, there's like 11 different, or I think it's like 9 different or 10 different, different lending markets. And they're all actually denominated within Nest LP tokens. And you can borrow against that and do these different looping strategies that the on-chain audience is, quite used to be frank. Like, Andy, I'm sure you farmed a bunch of stuff. Robbie, you too. And you know, these use cases before we existed just did not exist, and that was the biggest issue with RWAs. You know, anyone can tokenize anything. I think tokenization is becoming a little bit more commoditized, but how do you actually get these users involved, and how can you actually put these assets to good use? And from what we've seen on chain to really drive retail adoption, this RWA looping strategy is only like the first use case that we've introduced. We have a bit more coming out, but this use case has driven a lot of you know, retail demand, which is why on the charts you can see that, you know, all of these users, they're all on Plume right now.
And Teddy, what are the assets? And based on the 3 dimensions that we talked about earlier, risk, yield, and duration, where do Plume's users fall? Are they, I would take it, they're probably low duration, high yield, low risk, right? That's the magic trifecta of all 3.
I would actually argue they were higher risk than most like Wall Street type investors, but
Yeah,
certainly,
so-
right.
For
If
sure.
you can get it with low risk, ideal. But yeah, where are they at on?
Yeah. So we have a lot of looping going on through one of our vaults called Basis. The underlying, actually, we work pretty closely with the Superstate team. So it's their USCC fund that takes up a majority of the vault, and then their treasury fund as well. And so, you know, these yields are high enough where the math makes sense. Like if you're borrowing at like 6 or 7%, the yield's got to be at least like 9 or 10 to then make sense for you to loop it a few times. So, you know, these assets are pretty liquid. I think it's like T+3, T+4. The yields are closer to around like 10%. It moves a lot given the market right now. I think right now it's you know, a different time and space. But yeah, I mean, these assets are the ones that are seeing a lot of looping demand. And kind of like what Chris was saying earlier, we have a lot more different types of RWA assets coming on that are in different asset classes. Like there's some PayFi assets that we're looking at where, you know, the yield on it is almost like, you know, 14 to 16 to 17% or so. And so what we're doing right now is really just educating folks on how these use cases work. And then we're going to hit them with a bunch of different new assets. And they're going to be like, holy shit, like this actually works on Plume. And we actually understand this now. Like the biggest issue before was there was just a huge information gap, like I mentioned earlier. Like no one really understood what they were doing. But we're making this, you know, feel a lot more like home for these folks. And Chris, I know you wanted to chime in there.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Yeah, can I just ask one thing real quick, guys? T+3, T+4, do you guys just cover that duration risk and have some sort of like way to cover it? Teddy, how do you think about how that, or Chris, how does that exactly work?
Totally. So there are 2 ways to do it. One is you just like live into it, meaning like if the user tries to withdraw, you wait 3 days, right? And you can get the money back. Now, we like instant liquidity, right? Because we're crypto people. The entire purpose and the reason why, you know, you see these numbers today, this chart up here, so it's like 580,000 total RWA holders, of which, you know, nearly 300,000 are on Plume, 280,000. Right? So it's over a little bit over 50% of the entire market.
Chart. Right? I mean,
so
wow.
Exactly. It's more. So we have more users of RWAs on Plume than the rest of the next 10 chain combined, right? Including Ethereum and Solana, all these things.
Yeah.
Correct. And it's because we think, I think we're one of the few that, and I think it's happening in this way, and that's why we're excited to expand to other chains as well. But like, we're one of the few that are thinking about this from a crypto native perspective, right? I think at the end of the day, it's all supply and demand. It's a market, right? And a market has 2 sides. You have assets and users, right? And because, you know, we grew up in crypto, right? Farming things and using things, we've always wanted to interact with these assets like crypto. And the dimensions of crypto are very simple, right? They're liquid, they're permissionless, and they're composable, right? That's the idea behind crypto native assets. And so we've tried to formulate these RWAs to fit that experience, right? We always think the magic is this Uniswap-like UI, right? To, from, swap. That's what you want to do for these assets, right? And then be able to plug this into Pendle, plug this into Morpho, or whatever you want to do and make this very easy to use. That's how we think about these things. You shouldn't even know it's an RWA, just like with stablecoins, right? You have no idea. It doesn't even matter, right?
So you guys
with Tether, we were
it,
just
Chris.
promised.
Sorry, you guys do cover it, but you could also just offer duration to users. They may be a bit upset about it.
Oh, yes. Sorry.
You just covered
That's right.
it. No. I mean, look, I'll listen to the rants all day. I just wanted to make sure that we're on the same page.
No. So there's two ways. We provide, there's two ways. One, we have some vaults that are just straight up, we'll cover it, right? Meaning the user will have to wait 3 days, right? But for many of our vaults, we're doing aggregate vaults. We do composite vaults to blend a lot of these things together because these assets don't fit that dimension perfectly. Liquid, composable, and high yield, right? So the only way to do that we have today is we combine multiple assets together to get you there. And what's in there is a very healthy liquidity buffer, so you can always get out if you want. And ultimately, if we draw down the whole thing, sure, you got to wait 2-3 days, but we have a liquidity buffer, so you can get out anytime. And that's how a lot of the RWA protocols work today.
I love you guys, but I have to ask because this chart is so insane. Out of the 300,000 users, are they all KYC to participate in these products, or do you have any idea? Are any of them bots and Sybils? Like, give us some sort of sense of this user base.
Yeah,
totally. Go ahead.
No. I was gonna say, so basically what we've done is, we've integrated our chain and our product into all these different distribution channels. So if you look at some of our recent announcements, we're integrated into Alibaba's Web3 wallet, right? Their users go to the earn section, they can deposit straight into our assets. We're integrated with OKX. We're doing a few more really large partnerships and exchanges and other wallets in Q1 and Q2. But the idea with Nest is you can actually permissionlessly deploy these assets. So if you're outside of the US, what users can actually buy is a token that represents the economic interest and the yield of the asset. And therefore, they can, if you're outside of the US, you don't need a KYC for these types of vaults. And that's been, a huge contributor to the exponential growth on this chart, to be honest. And by plugging into these different B2B or B2C channels, we can then really drive up the volume and drive up the users and really, make this thing sing.
That's
Chris. I know you wanted to say something.
Oh yeah, Chris, do you have anything else?
No, we have both in so many words, right? We have KYC users in here, but a big part of this is making this non-KYC and make it usable. Now, we run AML at the sequencer level and at the chain level and at the bridge level, right? So, one thing that we do make sure is that we run, we work with a bunch of partners on including Predicate and Elliptic and TRM and all these folks to really make sure that at the end of the day, the money's fine, because you can't have non-AML money, right, go into these assets, right? Because ultimately these are institutional assets, right? And so they need that clarity. We've worked with a bunch of providers to say, hey, look, are you comfortable with this? And they, we've been able to get it so far. And so that's been the idea. So we want to make sure there's some degree of control and checking on this stuff while keeping the door open on a user experience side.
Yeah, it makes sense. And I think you guys are taking this in a very thoughtful way, because what's happening, it's not on-chain versus off-chain anymore. Everything is moving on-chain. Like the DTCC own, 99.9% of, stock clears on it, and it's going to all be tokenized. So it's all going to be on-chain. I think the question is centralized versus decentralized. And we're using centralized in the front end and decentralized in the back. All of the centralized exchanges, Coinbase is using Morpho in the back. Like you mentioned, OKX is going to, you guys use Plume in the back. There's the Nest that's integrated with Alibaba. Alibaba, obviously centralized. But, we have Plume in the background to provide this yield and these products to the world if they're not ready to manage self-custody. So I think this is the direction that we're headed, and this is how we bring everyone on chain. They're accustomed, they're used to, they trust, and they're familiar with centralized front ends that they need. If they want to talk to a customer support, they can. If they forget their password, they don't have to, dig up the seed phrase in the backyard, and they can still have that customer support along with the digital asset products in the back end. So this is something that I anticipate we're going to get a lot more of. Eventually we'll get to a place where it's not just Coinbase and OKX offering, Morpho and Aave vaults. It's Bank of America, and you log into your Wells Fargo, and you'll have access to Janus Henderson's AAA CLO in the back end. And all of it is tokenized. And I know we're coming up on time, but I wanted to ask one more thing, kind of looking ahead to 2026. We know Jerome Powell's out. We know, the administration's taking control of the Fed. You guys see the money rain. We know the Fed cuts are coming. And, Teddy, you had mentioned, there's a lot of looping demand here. And we have to have some incremental yield above the stablecoin borrow rate, right? If borrowing is at 6%, maybe it's 9 or 10% that we need to generate. I'm curious how you guys see Fed rate cuts affecting this. I'd imagine it will bring the cost of borrowing fiat down. That will bring down the cost to borrow stable coins. Will we have a wider spread that we can capture by looping, or will it also bring down the yields? Talk through what Fed rate cuts in 2026 could do to the RWA market on chain.
Yeah. So yeah, I mean, like, with rate cuts coming, like it affects certain assets, right? Like the assets Chris was talking about, like on the treasury side, these yields will go down, borrow rates will also go down. But what we're doing differently is actually now we're focused on very quality assets, like I kind of touched upon earlier, that are more like in different asset classes that could be like PayFi related or some private credit. And the beauty of these assets is, they're not really affected by these interest rate cuts as much, right? They're always uncorrelated yields. They're paying back users with stable coins. So as the spread kind of widens a bit, like you were saying, Robbie, and this goes back to your question earlier, actually, on who our users are. A lot of users will start actually doing more looping on Plume and within these different vaults. And we're seeing actually right now, a lot of our users are, in emerging markets and, Africa and Southeast Asia and these places. And the reason for that is because if you really think about it, the assets that we brought on chain, they're basically assets that you can't really access unless you're working with like a Morgan Stanley private wealth management arm, right?
Yes.
To get access to an Apollo private credit fund or a WisdomTree private credit fund, it's pretty much impossible out there unless, you have a net worth over like 5 mil.
Like if I walked into the bank and asked for that product at my local bank, they'd be like, buddy,
yeah, exactly.
What? Yeah.
Exactly. So the fact that we can actually, supply these assets and give these opportunities to folks in parts of the world where maybe their currency isn't as stable, or, these opportunities just aren't really in front of them, even for folks like, us, it's just a huge opportunity that we're opening up. And the unlock is just massive. And I think right now we're really setting the stage and the scene for 2026 to really pick up on not only the looping side, but just RWAs in general, right? And I know Chris definitely has a few words, so I'll pass it to him.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market. Private credit is on the screen too. Talk us through rate cuts, private credit. I did see a macro post from my friend Kruger Macro, Alex Kruger, one of the best macro voices on Twitter. He sent me this excerpt in a private chat about private credit market is not as squeezed and there's not as many cracks as people may think. It's actually quite sturdy and strong. He does not expect any cracks first half of 2026 or even in 2026 in general. Great news there from Kruger Macro. Talk us through rate cuts, yields, private credit, RWAs.
Yep, 100%. I mean, look, it's going to go nuclear. That's the answer, right? I mean, a very, very short story is as rates go down, borrow rates go down, right? People are going to want to find more money. It's very simple, right? And not only do they need to search for higher yield things, right? Because you can't just park money in T-bills anymore, right? The hurdle rate to actually get to different assets is also going to go up, right? Go down. And so the sort of aperture is going to open and the sort of pipe's going to open, so more money is going to flow in. And so it's going to be a mad scramble next year, right? For people to try and suck in as much money as humanly possible into their asset to make their asset the thing of the year, right? Just like we had the T-bill cycle of the last 2 years. Now we're beginning to see CLOs, private credit, what's going to be. And we've seen a lot of talk around private credit, just like you said, Andy, right? Like there are some people saying, look, it's actually pretty dangerous. There's a lot of bad stuff. It's actually, some people think it's quite not that, it's actually not that bad. So we'll see where it goes. I think it is variable. Some of the stuff is kind of crazy, honestly, right? Some of the stuff is incredibly sketchy that we've seen, and some of the stuff is actually fine and people just don't understand it, right? And so we'll have to figure this out.
Yeah, with a 10% average APY here, you ought to think there's risk involved. That's higher than stock market risk. Stock market will say 7 to 8% a year is what you expect from the S&P. So on the risk spectrum, you're probably even further than that, but not much further. $22 billion of active loans today on chain in RWAs, looking like the leaders figure. I know that this is also an interesting dynamic where they have like one product and not many holders as well, but interesting capital allocation to them. Maple, Tradable, Fact, a couple others. Guys, I think this is going to hit 100 billion in 2026. I think that's actually low. I think this could 50 in 2026.
Hell yeah.
Hell yeah.
My bet in 26 is a 50x on this. I think it's 25 to 50x locked. That will put us at,
guys,
Rob's the math guy. 400 billion to a 400 billion to
what's
a trillion
the best
range.
way to
I
get
think
exposure on the growth of this asset? Like, think if this is right.
Don't tell us.
Here's what I think. Here's what's going through
Come on,
people's
man.
minds. It's like if
All
I
coins are
buy,
cooked, man. Everyone
if I
knows
buy
that.
the
Come on.
CLO product because I think this is gonna, the RWAs are gonna go nuclear, I get 7%, and it's like, okay, yeah, that's great, but I think RWAs are gonna 4 or 5x. I want the 4 or 5x. I don't want the 7%. How do I get the 4 or 5x?
100%. Look, one, I think it's important for everyone to use a couple of these things to get a feel of which one's going to work, which one's going to take off. And that will help you then dictate where do you actually make the bet. And look, the bet's always in infrastructure. Which tools are going to power this? Because like you said, I can put $1 billion into CLOs. I'm just getting 7% all the way up, right? How do you actually get real exposure to this and bet on this category, right? You got to bet on the tooling and the infrastructure is going to power this stuff, because as the volume grows, those products will start to generate fees and spit off cash and grow as well. And those are going to be real businesses. And that's what we're really excited about. And so I would look at applications that are really building and bringing new assets to market, tools in and around these things, right? Whether you're doing lending, borrowing, leverage, insurance, all these types of things. There's a lot of interesting things happening around these assets, and of course core infrastructure as well, the chain level and up and down. So I think across all three, all of them are going to go nuclear and going to explode. And so if it's me, I'm betting on all of them, right? And that's why for us at Plume, we've got the base layer, but we also have a bunch of applications that we're taking around, right? Because that's the whole point. We think that this is a big trend, not just for one area. It's going to be across all of crypto. And so I think there's a tremendous amount of protocols that are really interesting here that are going to go absolutely insane next year.
Hey, happy holidays, boys.
Can you be specific? Top 3, Chris? Top 3 applications?
Man, let's see.
Oh my God.
The dangerous question.
Put your freaking camera on if you're gonna ask these questions, bud.
Oh man, 3's tough, dude. 3's tough. But look, I think it's a ton of interesting ones. I'm obviously a big fan of what we're doing with Nest, right, which is our yield protocol and aggregation point. I still think there's a tremendous amount to do with USDS and Sky and Maker, right? I think they've done an incredible job. So I think there's more to go there. People think that they're big already. They're not. There's so much more to go. So I think that's a very, very straightforward bet. I'm so bullish Athena, right? Athena also knows what they're doing, and they're not idiots. Those guys are, they've done very well in the basis trade. There's a lot more to come there. I think on core infrastructure, I look at things like different lending protocols here. I think Morpho is an adjacent area. Obviously, I think a killer. I think Aave obviously going into this area as well. And you have newer things as well. You have some of the insurance protocols like Cork. You have some of the ones like the 3F Labs recently is another one that does looping against these things. And so I think whether you're going early stage or later stage, all of them, like, that's the beautiful thing about this market. This market is literally trillions of dollars that's going to come in, right? So if that happens.
Yep.
Exactly. If that happens, all of these are going to explode. So I think the majors are going to be great. New ones are going to be great. And tooling and asset issuers all around.
Ladies and gentlemen of Roll Up TV, there's a new category of assets to be invested in 2026. As we roll out our holiday campaign, you will see our market map kind of shape up over the next couple of weeks, and we'll drop the full one. And we're going to tell you what assets and what protocols and what teams we're looking at for 2026. It looks a lot different than 2025 and 2024. And we're very highly convinced of our thesis here, nearly certain. What we talked about today is really, really in line with what we believe here to come. Guys, stay tuned for the holiday campaign for the awards. Thanks for joining us on Money Moves Fast, episode 14. Been an absolute pleasure, guys.
Thanks, boys.
Insane.
Thanks for having us, man. Happy holidays.
Happy holidays.
As always.
Happy holidays, guys.
Happy holidays.